What's up everybody, welcome back to the channel. I'm Shawn, GILL CPA with Neutron Tax. Today we're going to cover the updates to the 2024 tax brackets and the contribution limits for all of your different kinds of investment accounts, health savings accounts, SEP IRAs, all that stuff. Before we get into that, make sure you give the video a thumbs up, like it, subscribe, leave comments, all that stuff helps me grow the channel. But now let's get right into it. So to save you the pleasure of hearing me read out every single number on the updated tax brackets, I'm going to have my editor put up the new brackets for single filers right here, and then for married filing jointly right here. Married filing separately is the same as the single filer bracket, so if you need to see that, feel free to go back to that part of the video a couple seconds ago. And then the brackets for head of household filers right here. So if you're wondering why these change, it's actually written into the tax code that every year the brackets have to be adjusted for inflation, just because obviously if they weren't and wages kept going up and incomes kept going up, everybody would be taxed like 1,000,000,000%, and you can quote me on that percentage. Outside of that, the brackets are basically tied to a universal index for inflation that the IRS code and Congress has decided is the most valid version. Contribution limits are also sort of tied to inflation, but they're a little bit more discretionary, and sometimes the IRS decides to raise them more than other years if there's been a huge period of inflation, such as the 2021 and 2022 tax years. We had a little bit of more of an aggressive change compared to the tax brackets that didn't change as dramatically as the contribution limits. But the reason you want to know this is because depending on how much your income has changed, you might actually be in a slightly better tax position if your income has not grown at the same level of inflation as the tax brackets have grown, or vice versa. If the tax brackets have not grown as much as your income has grown, you might be in a worse off position. So that's something to be aware of and know about, so that you're not caught off guard at tax time for the 2024 tax year, which would be April 2025. Now, to get into the changes to the retirement accounts, the contribution limits, these are kind of the more important numbers because you actually have a decision to make here on how much you're going to contribute through your W-2 wages or through your business. So for the traditional IRAs, the limit has gone up from $6,500 to $7,000 for the contributions, and that's $8,000 for people that are age 50 and older. The catch-up contributions, as they call it, for people that are 50 and over are still only $1,000. That amount has not changed, but it's $1,000 on top of that $7,000, as opposed to last year, which is 2023's $1,000 on top of the $6,500. Then for 401ks, those have gone up about $500 from $22,500 to $23,000. And then the catch-up limits on that for people that are 50 and up are still $7,500. So if you're 50 and over, you can actually put $30,500 into your 401k or your 403b. So if you have a W-2 job where you're contributing money to your 401k or your traditional IRA, make sure you tell your HR department that you want to continue to max that out. Or if you have to manually adjust it, depending on where you work, make sure you adjust it for these new limits. For the simple IRAs, those are up to $16,000, and that's $19,500 for people that are 50 and over. For SEP IRAs, they're at an all-time high of $68,000. So for self-employed individuals, depending on how much net self-employment income you have, you may be able to contribute up to $68,000, which is a ton. For 57B plans are up to $23,000, same as the 401ks. And same with that $7,500 contribution catch-up limit. That'll bring people age 50 and up to a total contribution limit of $30,500. And then for single people with HSAs, that number is now $4,150. For family health plans, that's $8,300, up from about the high 7,000s for families and the high 3,000s for individuals. And then the threshold for the new capital gains rates is going to be put up right here for single people, married filing jointly people, and heads of household. Those are also increased for inflation. And then finally, the annual exclusion for gifts and the gift tax is up to $18,000 now from $17,000. So there you have it. Those are all the updated numbers you need to know for 2024. Remember, the key here is to adjust your contributions to take as much advantage of these new higher limits as you can. So if you need to go to your HR department and tell them to change your withholdings so that the money can go to those places from your W-2, be sure to do that. Not all places do that automatically, and you don't want to be contributing, say, 20,000 if you can go, up to 23,000, assuming that you have the funds to do that and that's what you want to do. You don't want to miss out on those tax savings and those retirement contributions. As always, I've been Shawn Gill, CPA. If you need help doing some tax planning or have any questions about these, feel free to leave them in the comments below or schedule an appointment with me. The link to my Calendly is in the description below. You can schedule that and I'll hop on the phone with you and go over all of your options as well as give you a quote for our services. That's a no obligation quote. Appreciate your time for watching this video. Please give it a thumbs up, leave a comment, subscribe, all that stuff, and I will catch you in the next video. Peace. So that was the end of this video. If you liked it, please give it a thumbs up, subscribe, leave a comment. It helps me grow the channel. If you need help with your taxes, you can book a call with me directly at the link below in the description, and you can also sign up for our email list. We only send out an email about once a month, and that's everything I need to tell you. So I will see you guys in the next video. I'm out. Peace. Have a good day. Appreciate the views.